A lot of believers in IT are of the view that look, AI is just a passing phase. Y2K happened, enterprise happened, but Infosys, TCS, Tech Mahindra, they still are like top of the league companies. Do you think the AI fear is real, or AI is actually an opportunity? It may not happen this year, but it could happen in FY25 or 26.
No, so I clearly feel over a longer term period, AI is more a productivity enhancement. But in the shorter run, clearly it will create challenges. You mentioned Y2K. Y2K was a tailwind. Y2K was not a challenge for the IT sector. But if you remember, during Y2K days, these companies used to grow at 60, 70, almost 100% also. Today, now these companies grow at 8, 10. In fact, they struggle to grow at 8, 10%. One, their size has changed. And second, the business has become commoditized. And AI will actually commoditize it even further. So there are two things that the IT companies are running at. There is this old legacy business which is rolling off, and then there is this new business which is the digitization, which is picking up. But there is the one that is rolling off faster than the one that is growing. So at an aggregate level, these companies are not able to grow beyond 8-10%. And we have seen some of the stalwarts this year give guidance of 1 to 3%, and then within that 1 to 3% also further narrow it down to towards 1% rather than towards 3%. I think that is splitting hair. The fact of the matter is these companies are now commoditized, matured in nature, and they have not reinvented themselves. So giving a 25-30 multiple to a 8-10% grower in a good cycle, I don't think is a very smart thing. So that does not excite us. There is no re-rating possibility over here. So I would wait for the valuations to become so attractive in this case, where some amount of revival in growth can also lead to re-rating, which is what happened post-COVID, right, in most of the IT companies. But I don't see that today, so that is not something that excites me. On the pharma side also, there are different buckets, but the oral solid US-focused generic business is not exciting. Over there, the negotiating power has shifted totally in favor of the buyers over there. The sellers in India are never going to make extraordinary profit. There will be one odd opportunity in complex molecule or one odd opportunity in biochemical drug.
Maybe injectable does well.
Yeah. So, but those trends are also now, injectable trend, for example, is now probably reaching its peak. Now, if you see, just take out and see the last 3 years announcement, every company is talking about getting into injectables. So there is going to be a supply, excess supply in that. And again, the same thing that happened in oral solid will play out in injectables also, where there are 15 suppliers and 3 buyers. So the profit pools are kind of shrinking, and these companies have also grown in size. So I would say that particular piece is not exciting. But there are again small niche opportunities which are coming up, whether it is CDMO, whether it is, there are fermentation based API is a small technology which is very different. The opportunity size is much smaller, but at the same time over here the negotiating power is actually in favor of the seller as compared to the buyer. So you have to find those profit pools which are more sustainable and can grow over a long period of time within pharma and healthcare, rather than brush everything with the same paint and say this is good or this is bad.
We respect SEBI disclosures, but we spoke about groups. There is no SEBI disclosure there. And last time when we spoke to you, I think 6 months ago, you said that you think that as a group, HDFC Group could make a comeback. The merger has gone through. Things are falling in place now. Could that be the comeback group for 2024 and beyond?
No, again, I will refrain from naming any company.
It's not a company.
But I say the financials as a theme is something that we continue to be bullish on. Large private sector banks have the right to win, which there was a case for the PSU banks probably to have a mean reversion in terms of valuation because the cycle was favorable. But if you look at which are the balance sheet which are strong, where it is far less leveraged, all the PSU banks are 15x leveraged. All the private banks are 3x, 4x leveraged. The ROEs have the room to improve from 13-14% to 17-18%. And this is exactly the kind of scenario that you want, where you want to play that cycle. A 3-5 years of some of the couple of the leader banks not giving any kind of a return creates the perfect base for to start thinking of placing bets in terms of from 3 to 5 years perspective.